channel. I am Prabhu KB, CEO of Fibocan. As you are aware, Fibocan is into the business of enabling wealth. We enable wealth through training, coaching, mentoring, enabling clients devise their own investment strategies through our technology products and solutions. Vetri, meaning victory, innovative investment strategies, so far, Sonifard and Bowmits. They are very powerful and efficient strategies. In fact, name of our company itself is Fibocan. What is Fibocan? FI is Fibonacci, BO is Bollinger Band, CAN is candlestick. Hence, you can see the name itself reflects the powerful combination. In every video, we discuss what happened, why it happened, what will happen, why it will happen, when and how it will happen. Which is why I request everyone to watch the video till the end, click the bell icon, encourage your friends and known person to subscribe. Today is December 17, 2022, Saturday. As always, in this video, we'll be discussing about the global market performance. That is Dow, S&P, Nasdaq, currencies and commodities. Last week, as you are aware, we didn't put our videos. Anyway, we will cover today's video. First, Dow closed 32,920, 1.7% down. Nasdaq 10,705.41, 2.7% down. S&P 3852.36, 2.1% down. While FTSE 7332, 2% down. What had happened? All the indices, particularly the three US market indices, formed strong bearish bar reversal in weekly chart. It's a very powerful negative candle. Also, other than Dow, everything is now below the Bollinger exponential band, Bollinger middle band and exponential moving average. That's a significant factor to consider. Next, in the daily chart, all these are now sliding down below the Bollinger lower band. In the monthly, now Dow is below the November month open, Nasdaq and S&P, the current month high crossed previous month's high, and now it is below the previous month's open. In fact, it is threatening to go to the previous month's low. That is, if that happens, you can forget 2023 for global markets. However, one thing that is giving some kind of comfort is the 200-day moving average for Dow is just 1.5% away. In fact, I'll give you the range. It is somewhere around 200-day moving average is somewhere around 32455, which is just 1.5% away. Whereas in the case of S&P and Dow, it is well below the 200-day moving average. So I expect a powerful short covering rally to happen next week. There are only two things that can happen. That is why in stock market, unlike anything in life, any other decision or even a very small decision, whether to go into a film, you have 10 options. Probability of succeeding is very, very minimum. But in stock market, even fools can make money because the probability is 50% success straight away. Either it is go up or go down. However, we are not making that statement. All we are making here is that it is precariously positioned. So the 200-day moving average will act as a great support. It can take support because in the daily it is below the Bollinger lower band. Weekly it has formed a solid two red candles. Normally, if that is formed, normally the third candle, if it forms, you can say rising three methods. The fourth candle will be a solid green candle, it will form. Many times, after the second candle, the third candle itself will be a very big green candle. So, hence there are only two possibilities. The possibility of sliding down further or forming a powerful short covering. And I feel there are no technical factors available. It is only looking at the 5-hour chart and the 1-hour chart, because there it is rounding and moving towards the middle band and upper band. In the 5-hour chart, it has formed a solid reversal. Looking at that, the probability of a powerful short covering is more than 80%. In this case, it is only probability. So hence one has to be very cautious. Looking at the movement on Monday, we will know what will happen. FTSE on the other hand, the 200-day moving average is 7321. The same story. It is slightly above because as you see the close is 7332, 200-day moving average is 7321. So FTSE is again the same thing. Daily it is below the Bollinger lower band. In the monthly and weekly, it is below the exponential moving average but above the middle band. In the monthly, it is slightly above the exponential and middle band. Hence, the 200-day will act as a very powerful support. If that happens, you take it in from me, next week, it is all the indices across the world will go up by 1 to 2% minimum next week. That's what I expect, and probability of going up is higher than probability of going down. CPOE weeks at 22.62, daily it is above the middle band. In weekly it is below the exponential and middle band, but still in the monthly chart it has formed a small green candle, but still it is above somewhere around 15 or 16 will give a very good comfort for a equity market. Nevertheless, it is relatively low. That's what I would say. Dollar index 104.463. So in the weekly it formed a spinning top long lower leg, which means at lower leg at 103.068. In fact, if you recollect, we have been selling 103.45 or 50 will act as a strong support. So it took support at 103 point levels. The bands are showing some exhaustion in the lower, in the daily chart, and in the monthly chart it formed a spinning top long lower leg and just below the exponential moving average but above the middle band. In the 20-day moving average in the daily is 105.622. So once it takes that out, then there is a strong up move possible. Till that time, that middle 200-day moving average will act as a strong resistance for dollar index. Bands are showing exhaustion, as I mentioned. So what does it mean? That means when the trend is down, the bands will keep sliding down, as I said in the case of Dow, Nasdaq and S&P. Whereas here the bands are moving in parallel, kind of. Not exactly parallel. It is showing, the lower band is showing exhaustion. Why? Because the middle band is showing exhaustion. Okay. So lower band is -2 sigma. Hence, no, it is also showing exhaustion. That means the selling pressure is arrested. That means the dollar index weakness is arrested. So we have to see how it closes. If it closes somewhere around these levels, next month we can see a good up move because it will be in a position to form morning star. Now let's analyze the individual components. Euro versus USD 1.0582. In the weekly it is moving up but formed shooting star. A green candle it formed but formed a shooting star. In the daily well above the 200-day moving average, above exponential moving average but below Bollinger middle band in the monthly. So hence we have to see how it moves. Euro is relatively looking, in fact I would say Euro is the strongest against dollars of all the pairs with dollar. GBP versus USD 1.2140. Monthly it is below the exponential and middle band. Till now it has formed a shooting star, red candle with a long lower upper wick. So there in dollar index lower wick, here it has formed a upper wick. What it reflects? That means bulls are not able to take the price up. There bears are not able to take up. It's an opposite because it is Euro GBP versus USD. So weekly it formed a solid red candle, long upper wick, shooting star as I mentioned. In the daily it is below the Bollinger middle band and exponential moving average. Just 200-day moving average is 1.2028, slightly above that. Hence, no, that will act as a support. When we analyze USD versus JPY, it is at 136.69. Here the picture is different. What happened? Weekly it formed a dragonfly doji and below the exponential moving average and Bollinger middle band. Monthly, small but solid green candle after a big red candle last week. So what happens? Here again it is about to form a spinning a morning star it can form next month. Hence no one has to be very cautious because daily it is above the 200-day moving average. So as you can see, while GBP and Euro against dollar is below the Bollinger band, here it is above the 200-day moving average, which means USD is strong against JPY. So USD is now, Euro is also strong but against dollar, but GBP is losing strength against dollar. That means out of three major things, two are weak against dollar, only one is showing some strength, which means dollar index looks set to go near the 200-day moving average. Whether it breaks that or not, we have to see. Now, our interest, USD versus INR. USD versus INR 82.706, solid green candle with slightly long upper wick. That's okay. After a solid green candle last week, it formed a very big green candle last week. After that, once again it formed a green candle but upper wick in the weekly chart. Till now in the monthly it has formed nearly a bullish engulf and it is within a striking distance of Bollinger upper band. If you recollect, last month was the first month after 9 months or after 8 months, it closed below, away from the Bollinger upper band in the monthly chart. Excuse me. So this month it is now threatening to touch the Bollinger upper band by the time it closes. Why? If you see the 200-day moving average in the daily, it is at 79.124, well below that. Hence, no people who are saying that no, this is short-term weakness and all this thing. No short-term weakness. USD is very strong against GB, against INR. And 200-day moving average, 50-day moving average is 82.015. Hence, no, it is very strong. And people who are having expectation that USD is going to weaken against INR, I'm sorry for them, at least technically. Now, next is US 10-year treasury yield at 3.488 in the weekly chart, formed a solid red candle, but it is positioned to go up, though it formed a solid red candle just below the Bollinger middle band and exponential moving average. In the monthly, it formed a solid red candle, but still well above the Bollinger middle band and exponential moving average. Why? When we look upon the 200-day moving average in daily, it is well above it. Hence, what I expect is this month it will close somewhere around these levels, and next month we can see an up move once again in this. So if these things happen, what will happen? It is a risk of trade. Risk of trade in where? Equities. That is what is going to happen next month, January. Brent. Of course, it all depends on how it closes. Another 10 trading sessions are there for the month. We have to see. But position, technically it is positioned that way. Brent at 79.04, NYMEX at 74.45. Both in the weekly formed first solid reversal below the Bollinger lower band. So what had happened? Last week it went below the Bollinger lower band. Now this week bears could not push it down. So bulls recovered and formed a reversal. Of course, this is the first reversal, but seems that it is a very good reversal that bulls were able to bite a counter attack against bears. That means the lows that it formed in this week should act a low for some more days to come, or probably that might be the low for at least in the next few months to come. Monthly, it is still below the Bollinger middle band and exponential moving average, and daily solid red candle for the second day in succession, but could not cross the Bollinger middle band and exponential moving average on the upward direction, which is why we saw that though it formed a reversal in the weekly, formed a slightly long upper wick. Notwithstanding that, and the 200-day moving average is well above, where it is somewhere around 100.91 for Brent and 95.9. That means any reversal happens, till that time, once it takes out the 50-day moving average, it can keep going up till that level. Of course, that will also come down. So hence, no, we expect there will be a good up move that will be coming next few months. That is what we expect, looking technically at all these individual components. So I am sure that you would have enjoyed the technicals. While we have keen interest in showing the graphs and other things, unfortunately due to various technical reasons we are not able to do, but we will try to do that. Thank you all for your patronage.